please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This evening, the tariff tussle between the United States and China is rapidly turning into a full-blown trade war. US President Donald Trump has threatened China with a new raft of tariffs. He has asked his team to identify $200 billion worth of Chinese goods with additional tariffs at a rate of 10%. Now, responding to Trump's threat, China has pledged to fight back if Trump goes ahead with his plan. CNBC Eunice Yoon is here with the details. Eunice, Chinese stock very clearly taking a beating at the back of that. What is China's plan of retaliation now?
China has accused President Trump of initiating a trade war and going back on his word. The Commerce Ministry said today such a practice of extreme pressure and blackmailing deviates from the consensus reached by both sides on multiple occasions. So as of last week, the Chinese believe that they did have an agreement with the U.S. in order to buy tens of billions of dollars worth of goods to help narrow the trade deficit. But at the same time, that would only be the case if the U.S. didn't impose tariffs. So now that deal is off the table. Now, China said it would fight back firmly and consider now qualitative and quantitative measures. Now, the fears of a coming full-blown trade war hit the stock markets out here today. The Shanghai market dropped by 5% at one point. The Shenzhen market fell by 6%, though it did recover at the end of the day. And Hong Kong lost 3%. And part of that was because it was weighed down by a plunge in the shares of the embattled Chinese telecoms company, ZTE, down by 20% today. Now, the words qualitative and quantitative got a lot of attention here in the American business community today. And that's because the fact of the matter is that China really cannot match the U.S. tariffs on $200 billion worth of goods. Why? Because China doesn't buy that much. It only buys $130 billion worth of goods from the United States. So a lot of the business people I've been speaking to say that they fear other types of retribution on the American companies that are operating here. They say strict safety inspections, delayed license approvals, and possible consumer boycotts.
Okay, Eunice, thanks for that. Very clearly, China is not going to take this lying down. There is expected to be some retaliation, as Eunice was pointing out. But at the back of this, it's a sea of red across global markets. So in Asia, the Chinese market saw heavy losses and shut about 4% in the red. Hong Kong's Hang Seng was down about 3%, and both Japan's Nikkei and South Korean Kospi ended with cuts of about 1.5 to 1.7%. It's a similar picture as far as Europe is concerned. While the British FTSE is trading about 0.5% lower, the German DAX is losing 162 points and the French CAC down by over 1%. That's as far as European markets are concerned. Of course, US markets are not open yet, but in the US, the Dow is expected to open for trade over 350 points in the red. But the tariff tussle between US and China clearly weighed in on our markets as well, with the indices ending with sharp cuts across all sectors. So the Nifty, for instance, managed to hold on to the 10,700 mark, ending at a two-week low level. The Sensex tanked 260 points. PSU Bank Index ended 1.5% in the red. Now, while mid-caps shed about 230 points. Anuj Singhal is here with a wrap of today's trading action. Anuj, it was very clearly a bad day for the bulls, but was it largely bulls running for cover after the global, clear global pressure?
Well, bad day for the markets today. The indications were there at the start with the kind of global cues that we had. Currency really has been the major talking point because of global trade war fears. And today also we saw that big decline in the dollar rupee. And mid-cap saw a sharper cut today. In terms of index, there were 3 or 4 stocks which basically dragged the market, though it was across the board. 45 Nifty stocks were down today. Infosys, Reliance and State Bank of India, they accounted for major part of the market drag today. Though as I said, it was broad-based, so Vedanta, IOC, UPL, Mahindra and Mahindra, and even some of the stronger stocks like Sun Pharma and IndusInd Bank were down. In the F&O space, again some big losers like CG Power, SAIL, India Cements, NMDC and HCC. While there were some gainers as well like JP Associates, Motherson Sumi and Container Corporation. What next? Well, one thing is clear now, this global cues going to dominate now. There are clear indications of fresh mid-cap selling. The Nifty, though, has now retreated back to the 20-day moving average and the lower end of the recent range. It didn't break the higher end. Would be interesting to see if it breaks the lower end of the range.
Okay, Anush, thanks for joining in with that. But you can perhaps take heart from the fact that most of the market veterans have been saying that this correction was expected. But let's move on to commodities. Commodities also facing the brunt. Oil prices are very clearly falling on the back of escalating trade dispute between the US and the China. So Brent at 75.04, down by about 0.4%. NYMEX at the $64.9 per barrel mark. It's gone below that 65 mark at about 1.3% in the green, but in the red. But it's not just because of the trade tensions. Prices are also under pressure on fears of a ramp up in production. At a meeting later this week, producer group OPEC and a key non-OPEC producer Russia are likely to gradually increase output to make up for potential shortfalls from Venezuela and Iran, and that has led to a significant portion of why we are seeing crude prices be under pressure. But let's come back home, and here's a big story from the aviation space. This one's an exclusive as well. The government has put its plan of divesting 76% stake in Air India on hold, at least for now. The government's decision to put its plans on the back burner comes 3 weeks after the national carrier's proposed 76% stake sale failed to find any bidders. Ashpreet Sethi, who has been tracking the story, is here with the details. Ashpreet, what's the reason behind this sudden derailment, and will the government actually look at going ahead with this at a later date? What will the next step be?
Well, as we told you, of course, first, as far as the first meeting that was held, as far as Air India divestment is concerned, between the top ministers, now sources who are also part of the alternate mechanism tell us that it seems like the Air India divestment has been put on hold right now. In fact, oil prices have been a concern. That is what we are picking up from sources. The government wants to ensure that they bring in more efficiency as far as Air India is concerned. So it seems like they will be getting more private players on board as far as reviving the ailing Maharaja is concerned. Now we'll have to wait and see what will be the next step, but for now we do pick up from sources that it has been put on the back burner. It remains to be seen whether there will be a government official statement at all, because remember, this is a story which involves national interest, as the government has been trying to divest along with the massive debt that Air India has of about 33,000 odd crores.
Okay, Ashpreet, thanks for joining in with that. We will take the implications and ramifications of this forward a little later in the day. But for now, let's talk about the big story that we have been tracking since yesterday. In what came as a big shake-up at ICICI Bank, the MD and CEO Chandra Kochhar has decided to go on leave. Now, this until an inquiry led by Justice B.N. Srikrishna into the allegations made against her in the Videocon case is complete. The bank has now appointed Sandeep Bakshi as the bank CEO or the Chief Operating Officer, while the stock has given a muted response to this big management shake-up. As you can see, it did fall but ended up correcting by the end of the day. Ritu Singh is here with what brokerages make of this move. Ritu, take us through what the takeaways have been. There are some thumbs up, but it's not really a all green signal from brokerages yet.
Well, absolutely, Kritika. I mean, it's been a bit of a mixed reaction from the brokerages. If you look at the stock, it closed marginally in the red, but over the month, on the back of expectation that there will be a change of guard at the helm at India's second largest bank, the stock has risen marginally about 2.5% over the last 1 month. But here's what the brokerages are saying. The first from Jefferies, for instance, says that although it does not wish to second-guess the board, it would wait to see how the three-tier structure, which is currently being created with the CEO, who in turn will be reported into by the CEO, who then the board will be putting into, how that three-tier structure was managed, especially in the event, if Chandra Kochhar doesn't come back, how will that be resolved back into two-tier structure? That is something that remains ambiguous. For instance, Morgan Stanley says that they want to wait and see whether or not Chandra Kochhar will be reappointed. That may have a more material impact on the performance of the stock. It also says there are further changes expected, what with the chairman retiring at the end of June. So the board is also likely to see a bit of a reshuffle. It says that Bakshi may also in future be the front runner to become the CEO of ICICI Bank, given that he's been given this important position. Of course, this is in case Chandra Kochhar does not return in a position as MD and CEO. And lastly, IDFC Security is a bit more positive. It says, given that Bakshi has had a wide range of experience within ICICI Bank, this will help aid a smooth transition. Secondly, it has also, ICICI Bank, through its decision yesterday, has set a good succession plan in place, and therefore it is a win-win not just for the bank but also ICICI Pru Life.
Okay, Ritu, thanks for joining in with that. So brokerages, markets and us on wait and watch to see what happens now. But after Sandeep Bakshi takes charge as the COO of ICICI Bank, ICICI Prudential Life will get a new head. The board has approved the appointment of N.S. Kannan as the MD and Chief Executive Officer of the group's life insurance business. Yash Jain is here with more details. Yash, what does this mean for the company, and also take us to the highlights of Kannan's journey with the group so far?
Well, the management reshuffle at ICICI Bank also got a change of guard at its life insurance subsidiary, which is ICICI Prudential Life Insurance. As per the direction from the board of the bank, ICICI Pru Life approved the appointment of N.S. Kannan as its managing director and CEO, relieving Sandeep Bakshi from that very role, who will continue to serve as the non-executive director of the life insurance vertical. Also, this reshuffle at ICICI Prudential Life will require the insurance regulator IRDA's approval, but that will be more of a procedural requirement. But at the moment, talking about the man at the helm, Narayanan Srinivasa Kannan, academically, he is a CFA from the Institute of Chartered Financial Analysts India, also holds a bachelor's degree in mechanical engineering. He is also an MBA in management from IIM Bangalore. As far as his association with ICICI Group goes, he was appointed as the project manager at ICICI Group in the year 1991, went on to become the executive director of ICICI Bank in the year 2009. Also, as far as the departments that he's looked after some of the most crucial departments like finance, treasury, corporate legal, operations, as well as risk management, with other various smaller departments. He was also appointed as the chairman of ICICI Bank UK PLC in the year 2017. He's played a material role when it comes to the various subsidiaries of the ICICI Group. He's been the chairman of various subsidiaries like ICICI Pru Asset Management Company, ICICI Eurasia, ICICI Securities Primary Dealership, as well as the life and the general insurance company, which is ICICI Prudential Life Insurance, as well as ICICI Lombard General Insurance. So yes, it's a clean blend of experience as well as understanding of the various group companies, which has really made the board decide on his name as far as the position of MD and CEO is concerned for ICICI Prudential Life Insurance.
On to CNBC TV18 exclusive. Baba Ramdev's Patanjali Ayurved may have disrupted the FMCG space over the last 2 years, but now Dabur's vice chairman Amit Burman says lost market shares are back in the food and natural segment. In an exclusive interview with CNBC TV18's Priya Sheth, he added that Dabur is now well geared to gain from the Ayurveda space in 2019. He has also confirmed that the company is looking at acquisition and for an IPO in the restaurant space. Here's a slice of that interview.
I think the Ayurveda phase is definitely there. I think our competition has done a good job in increasing that pie, and I think we actually have the backing of science behind Ayurveda, and we have a lot of new products which are coming out in Ayurveda. So yes, Ayurvedic wave is on, and I think we are right there in innovation, in getting the science behind Ayurveda and launch new products.
You know, over the last 2 or 3 years is when we've seen the maximum growth coming out from competitors, for example, like a Patanjali Ayurved. They've doubled their revenues on a year-on-year basis. But, you know, as of now, when we enter into FY19, FY20, when you look at the market from the outside, do you think that the Patanjali wave is over? Do you think that, the threat that it had on the Indian consumer industry is perhaps ebbing?
So I don't think I'll comment on the Patanjali wave as such, but all I can say is that when the competitors were there, we lost some share in honey, we lost some share in Chyawanprash. We are back to where we were. So the market has started growing because of them, but our market shares have come back. So we are, I think, maximum to gain out of the whole thing going forward 2019.
You know, Dabur has had a first mover advantage, 135 years of legacy. Do you think that perhaps Dabur could have capitalized on this core Ayurvedic wave much before competition really brought it into the limelight?
We could have definitely done more in terms of promoting Ayurveda, in terms of bringing it more urban as such. But then, there are in every category some disruption happens, and then the category growth. We've seen it in the mobile industry, we've seen it in the airline industry. So these things happen, and we all want to be ready for it, but sometimes it's not easy to be there.
So you're saying it's science and quality over faith then?
Yes, I definitely believe that.
And you can catch that entire conversation at 5:30 p.m. today only on CNBC TV18. Well, driving over to the auto sector now, while speaking to CNBC TV18, Maruti Suzuki chairman R.C. Bhargava has raised concerns about India's EV policy. He said that the charging infrastructure for electric vehicles is inadequate and that there is no budget plan for the upcoming years. Further, he added that the government's policy is based on anticipation that the battery cost will reduce eventually, but we need to wait and watch to see if the cost will really come down or not.
Charging infrastructure in the country is still very, very inadequate. Nobody's really got any major program going to build infrastructure. And as far as the budget for launching electric cars is concerned, that budget has not been made yet, because at the moment we only have a budget for 18-19. We don't even have a budget for 19-20, let alone 2021. So I'm afraid there is no budget or capex or anything planned for that. Over the last 6-7 years, battery costs have been coming down. The Government of India's policy towards electric cars, I think, has one major assumption in it, which is that this trend in the reduction of battery prices will continue over the next few years, and battery costs will half to what they have been. Roughly, today battery costs, I think, about $200 per kilowatt hour. I think that will half is the expectation. Many consultants have given that expectation also. Whether it's going to happen or not, only time will tell.
On to the big political story of the day. The BJP has ended its 3-year-old alliance with PDP. The party has withdrawn support from the Jammu and Kashmir government, and following the withdrawal of support by the BJP, PDP leader Mehbooba Mufti has resigned as the Chief Minister of the state. Hear out what different political parties have to say on this development.
एक बात याद रख लेना, अगर गवर्नर रूल भी वहां लग जाती है उस राज्य में, तो भी हमारे आतंकवादियों के खिलाफ का मुहिम जारी रहेगा और सफलता से आगे बढ़ेगा। यह मुहिम तो चलेगा ही, इसलिए ये दो को लिंक करने का कोई कारण नहीं। मैं इतना ही कह रहा हूं, स्टेट गवर्नमेंट का जो रोल है उसमें हम संतुष्ट नहीं है, इसलिए हम बाहर आ रहे हैं।
ऐसी चीजें एक्सपेक्टेड होती भी है, नहीं भी होती है, तो इसमें सरकार आती है जाती है, इसमें कोई नहीं। सबसे ज्यादा सीज फायर वायलेशन इंटरनेशनल बॉर्डर पे जम्मू प्रोविंस में हुए। सबसे ज़्यादा सिक्योरिटी फोर्सेस मारे गए, आर्मी जवान मारे गए, पुलिस के पैरामिलिट्री फोर्सेस के लोग मारे गए, सबसे ज़्यादा सिविलियंस मारे गए। आज जम्मू कश्मीर को बर्बाद करके, तबाह करके, अब बीजेपी सारा गुना पीडीपी के मत्थे फोड़ के भाग नहीं सकते।
All right, moving on to a Network 18 exclusive, we learned that Nirav Modi is allegedly in possession of 2 Indian passports. While his first passport was his first name as Nirav Deepak Modi, his second passport has his surname as Modi. Now, while both passports have now been revoked by the Ministry of External Affairs, it hasn't stopped Nirav Modi from travelling multiple times in and out of the country on them. Remember, Nirav Modi is the prime accused in the 13,000 crore rupee PNB fraud. CNN News 18's Ashish Maharishi is joining in now with exclusive details. Ashish, what details do we have as far as Nirav Modi's travel is concerned on these 2 passports?
Well, if you remember, the Indian agencies were also a little perplexed on how he was traveling on a revoked passport. So after checking the records of the regional passport office by different agencies, which include CBI and ED, they were able to find out that at least 6 passports were issued in his name. But ultimately, it was revealed that 2 passports were currently being used by Nirav Modi. Now, out of these 6 passports, 4 were used earlier, which were basically these passports were issued in lieu of the old passport being revoked or being expired. But after that, he used 2 passports which were issued in the in the year 2017 and 2018. Now, 2007 and 2008. I beg your pardon. So, more interestingly, he has also, tiny changes here and there in his passport, which reveals that Nirav Modi, at least in one passport, he mentions his surname is Modi and his first name is Nirav Deepak, whereas in the other passport, the surname is missing and the entire name, the first name has been written as Nirav Deepak Modi. And same is the case with his father's name, where, he mentions Deepak, his father's first name, that is Deepak Chimanlal Modi. And then if you go to the other passport, Modi, Chimanlal Deepak, that is how it is mentioned. So, tiny changes here and there, and 2 passports have been issued. Now, the Ministry of External Affairs has also confirmed that 2 passports were issued.
And have been revoked, right. So,
and have been revoked. Yeah.
Right. So, I mean, that is a curious case indeed, Ashish. Thanks for joining in with that and giving us the details of that story. But with that, it's time to wrap up this edition of After the Bell. Thank you for watching. Stay tuned to CNBC TV18. Lots more on the other side.